Wow, it should be interesting week. We have some new numbers. We have the Fed coming with their decision this week for the Fed funds rate. Hey everyone, it's Rayce Robinson, your favorite Florida mortgage broker. And if someone got me this shirt, I thought it was cool. I got lots of problems, but closing loans ain't one. And in celebration that the market has picked up, we have gotten more sales and more transactions going, which is awesome. And I'm going to share with you something I see a lot of agents that I work with all over Florida. There are some agents knocking it out of the park and what they're doing to kind of set themselves apart, especially in a market that's a little different than what we've had in the past with really limited inventory. So let's look at rates here real quick before we get into the Fed meeting. National average for rates, according to Mortgage News Daily, 6.59%. Remember, last week we covered loan level price adjustments. Every situation is different, so there's no exact rate for everyone. But in general, super qualified clients that don't want to pay a lot of extra cost are getting rates in the mid sixes, which means we've really plateaued at that 6.5% range for quite a while. Now, if you look here at the Fed meeting, this is from Forbes magazine. The bond market currently pricing an 86% chance of another 0.25% rate hike at this meeting. I think we do get the decision on Wednesday. I think they meet on Tuesday, do the decision on Wednesday. Now, with that, this is one of the, I think is great news, is the Fed took us on this journey of killing demand. Their goal was to strip out demand in the market because they really don't control the supply side that much. And they eliminated about 30 to 40% of demand across the United States. Starting to come back, but obviously almost every market, I would say actually every market in all the United States, every major market was affected by this, and some markets are picking back up faster than other markets. But it does mark the end of this cycle of raises that they did at a really fast clip. And bond market, which is what they call smart money, predicting rates to fall, the Fed to start cutting the Fed funds rate maybe later this year. I've made a prediction, which I've definitely been wrong so far, that I think rates would be under 6, closer to 5.5% by the end of the year. I still think that's going to happen when you look at some of the numbers, especially potentially going to recession and other things like that. But again, no one really knows. But I do think that rates are definitely not going up from here. Definitely meaning I don't have a crystal ball, but that's most likely. And to me, the trajectory is to be trickling down throughout the entire year, which is good news, is pushing more and more people back into the market. Now, when you look right here from, this is Altos Research. I really like this. They have great data. There's a few sites that I really follow. Mike Simonson is really good. And one of the things that he talks about here, two things. One, we had 21,000 homes come into the market, which is the biggest since he said since September. So we are getting some inventory coming to the market. And I've had this theory that there's some pent up supply. So as rates fall, you're going to see supply come in the market because there's a lot of people that want to upgrade homes, want to trade in their equity, and they just haven't had the incentive to do that. Now, this is the thing that I still have a hard time getting my mind around this. So they said even with the bump in new listings, there are now 414,000 single family homes across the market, across the United States, the US market. And that's up a little bit. I still can't believe there's only 414,000 homes on the market. I was speaking at an event and I misspoke and said there were 414,000 homes on the market, and everybody thought I was talking about homes in Florida, not the United States, which if you think there was 1.5 million homes on the market in like 2016 and there's 414,000, we not only do we need supply, we need a massive amount of supply to catch up. I mean, most markets, major markets, are almost under 2 months of inventory really across the United States. I pulled up these national numbers from Redfin, and I just thought it's good to know some of these national numbers. So the median home price is $367, according to Redfin, down 2.8%, but hardly anything. And the biggest, so they say prices declined in 29 of 50 of the most popular markets in the United States. But other than Austin, all of these are in California. And then sales increased and they list Florida, a couple places in Florida and around the nation. So again, most places in Florida have had no price depreciation, or if they have, maybe 1 or 2%. Again, that's because there's no inventory. Now, I thought this was a telling. New listings declined in all 50 of the most popular U.S. metros, meaning everyone is dealing with lack of inventory. 47% of homes that went under contract had an accepted offer within the first 2 weeks on the market, and 30% of homes sold above their final list price. highest share in 6 months, but still down 53% from a year earlier. And the average sales to list price ratio is 99.1%, which means when you get a house listed in the right price range, those houses are selling immediately. And if you're in Central Florida listening to this, you know the market is really picked back up. There's really multiple offers on a lot of homes. What's a good thing that I see happening? What's the opportunity in this market? One, I think the Fed is at the end of their current rate cut cycle, which is great, or raise increase cycle. I believe we'll be on the other side of that. I believe we're getting to what I call the end of peak negativity by the news, meaning there was so much news out there about, there's going to be a market crash, a market correction, and now you're starting to see that change, which is great. I think we needed to get on the other side of that. I think most people, when I talk to them, don't have that conversation about there being a big market crash as much anymore, which is great. Still, lack of inventory. And so one of the things to kind of celebrate is I went through the crash of 2008. I don't think this is anything like 2008. But the thing that made 2008 so tough is there was no activity. There was just no sales. There was no activity. So we do have activity. It is a very imbalanced market with inventory versus the people that are wanting to buy and the people that are probably going to get pushed into the market. I think the scariest rate for me is like 5.5% to 6% because you get a lot more people wanting to buy, but you don't get a lot of incentive for sellers to put the supply on the market. But again, there is activity. And the people that I see doing well, I call it a daily success plan. But either one, they've been in the business for a while and they have a lot of built-in business, which is hard to emulate if someone's been in the business for 25 years. They've got a big reach to their clients. Or two, they do something well every day. And it doesn't matter what that is. Maybe it's social media. I think that's part of the equation, but I don't think that's the only thing you can be doing. But there is activity, there is business out there, and the cool part of that is we are headed back into a more, whatever this means, normal market. There's going to be lots of activity. If I was to say anything kind of negative as far as just how the market's working out, is you have a lot of first-time home buyers or people that need credit help, or we're spending a lot of time with to help get pre-approved, and we're moving into an extreme seller's market, likely extreme seller's market, where sellers are really going to dictate all the terms again, but we don't have these massive move-up buyers or buyers putting 20, 30%. We have these regular buyers that are in a normal market trying to dance to the tunes that the sellers are making them dance to. And it is hard because these are not buyers that have a lot of money. We're helping them with credit and they're getting gift funds and doing all these things that happen in a normal market. But good news, lots of activity out there, lots of opportunity to make money. If you're in the real estate business, if you're a lender, whoever, if you're an investor, whatever the case is, I see everyone, at least the people that have something they're doing well all the time, doing well and executing that. And if you need a daily success plan, I do sponsor a class on Tuesdays. It's the biggest online gathering of real estate agents in the United States. Strongly recommend checking it out. Have a great week. If you have any questions on this or anything else, reach out to me. I'd love to help. Have a great week. I'll talk to you soon. Bye-bye.